Millions of Ugandan youth need a range of financial products, including credit, savings, insurance, and financial literacy. But very few financial products are tailored specifically to young people, since financial institutions often perceive young people as riskier clients than older adults. As a result, the youth have relied on informal sources, typically family and friends, to obtain access to financial services. This is believed to be affecting the growth of businesses operated by young people. This, according to the Youth Member of Parliament for Western Uganda, Mwine Mpaka, requires government to come up with several interventions.
This all shows that we have a problem in our financial sector. Yes, the young people want to get loans. We have seen government taking up several activities or several interventions to deal with this issue, but we still have a challenge because the commercial banks intend to implicitly and explicitly make profit whether you want it or not. So the only way we can move out of that situation is creating a youth development bank.
Mwine is among the younger legislators in Parliament who are drafting a bill to have a youth development bank. This, they say, will incorporate existing youth programs like the Youth Livelihood Program, Venture Capital, and the Students' Loan Scheme for better dispensation of capital, just like India did.
India has one of the largest populations, but to find that India has the third largest savings ratio, this is because their financial institutions have worked.
A 2016 report by the Economic Forum on Global Competitiveness ranked Uganda 120th among the 130 countries in as far as availability of cheap financing is concerned. And the inability by the financial sector to address the peculiar needs of the youth could be the pushing factor.
The government brought the Joint Capital Venture Fund. This fund was a good initiative. However, it was giving short-term loans. And on top of that, it was giving loans of about 5 million shillings. Now they have had a review and their interest rates are now about 11%. But that is not enough because whether you like it or not, these funds are going to be channeled through a commercial bank.
The youth MP's term allocated youth funds as scattered finances that need to be channeled through this bank if Parliament backs the proposed bill.
We can get foreign financiers who can give us money at about 3%. But if you do a Ugandan monetary policy, this 3% would go to about 7%. And 7% would be fair compared to the current 11% under the Joint Capital Venture Fund.
I don't think any development partner is willing to invest in financing. What they are willing to do is to invest in skills, to invest in market access opportunities, to invest in research, to invest in young people to incubate ideas and giving them short-term grants like 1,000, 2,000. But they cannot massively say that you will get about 30 billion and put it somewhere.
But the way now these interventions are crafted is where the problem is. So what I would propose is that if there is a financing mechanism, then the youth this financing mechanism could be like a development bank or a development facility. Like a development bank or a development facility where the youth could compete for this, but not saying that you are going to provide money to the youth. If you do that and they say money is available here, money is never advertised.
Professor Nwagaba, however, says the youth simply need seed capital and land.
So there must be a technically worked out system in which the youth can compete effectively through a technical process, not politics, not politicizing these schemes. If you politicize them, I can assure you we shall come here 4 years and there's nothing which has been done. The youth will very quickly form a group because they have heard that money is being given because when you are in a group, but not because we love to do this activity and then you can get financing.
The bank is expected to help millions of young people to access cheap credit and start income-generating activities.
So it's not an issue of financing alone, it's a whole comprehensive issue. So for me, my view is what we need to think about boosting youth employability is market access. Market access is the way to go because there are very many young people that have started up ventures and enterprises, but they've not broken through within a space of 5 months because there is limitation in terms of market.
In Uganda, more than 700,000 graduates entered the labor market with only 12,000 jobs advertised in the formal sector, leaving majority to face a bleak future. But could the Bank for the Youth be a lasting solution?
It is going to work just in case the youth are well they're well detailed about financial intelligence. There is them getting the loans are going to be there for them, but there is them getting the loans and they don't know how to use that money.
Majorly our problem as youth is not having a bank to give us money or something like that. We just want to have jobs to do ourselves.
The biggest concern is whether government will support this proposal, considering that it is struggling to recapitalize Uganda Development Bank and the Uganda Development Corporation.
Where are they going to get the initial capital? Because a bank, in order for a bank to be registered by Bank of Uganda, you must have a minimum of 25 billion. So where will they used to get that money from? I don't know. They have not come to consult me as yet. Well, I heard about it, but I have not seen them to consult the Minister of Finance.
Nelson Babyale, NBS, live at 9.